Ladies and gentlemen, good day and welcome to the RITES Limited Q3 FY23 earnings conference call hosted by Elara Securities Private Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note, conference is being recorded. I now hand the conference over to Mr. Harshit Kapadia from Elara Securities Private Limited. Thank you, and over to you, sir.
Thank you, Seema. Good morning. On behalf of Elara Securities, we welcome you all for the Q3 FY23 and 9-month FY23 conference call of RITES Limited. I take this opportunity from the management of RITES Limited, represented by Shri Rahul Mittal, Chairman and Managing Director, Shri B.P. Nayak, Director Finance, Shri A.K. Singh, Director Projects, and Shri Joshit Sikidar, Company Secretary. We will begin the call with a brief overview by the management, followed by a Q&A session. Now hand over the call to Rahul sir for his opening remark. Over to you, sir.
Good morning, everybody. Before I start, let me start with the safe harbor statement. The presentation which we uploaded on our website yesterday and discussions during the call today may have some forward-looking statements. These statements are considering the environment we see as of today and obviously carry a risk in terms of uncertainty, because of which the actual results could be different, and we do not undertake to update those statements periodically. Let me give you a brief overview as my opening remarks on the performance of Q3. We must say that we at RITES have delivered what we promised in spite of the challenges of order book and a contribution by the export segment, which as I have been mentioning in my past interactions, that all our efforts are on to get fresh orders. But in spite of that, the USP of the company came forth again, that all the other three streams of revenue, the consultancy segment year on year, there was a growth of 16%. Turnkey segment of revenue more than doubled, 115% increase. The leasing increased by 10%. And because of selectively targeting the key orders and key projects, you could see a core EBITDA margin increase from 23% to 26% and a PAT margin increase from 18% to 21%. So the core strength of consultancy as well as the USP of being able to balance in a quarter to quarter and balance between my various streams of revenue to give my shareholders and my stakeholders the best, we continued on that trend. With those opening remarks, I leave the floor open.
Thank you very much, sir. We will now begin with the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use only handsets while asking a question. Ladies and gentlemen, in order to ensure that the management is able to address questions from all the participants in the conference, please limit your question to 1 per participant. Should you have a follow-up question, we will request you to rejoin the question queue. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Thank you. We take our first question from the line of Yash Gupta from Kingside Advisement. Please go ahead, sir.
Yeah, good morning, everyone. So, sir, first question is on the order book. How the order book is looking currently in this quarter? We have increased our order book by almost 500 crore, but that comes from purely from the turnkey project. So, turnkey as a percentage of the order book keeps on increasing. I think in last 2 years we have increased from 37% to 47%. So, how the future of like next 1 year looks like? And would you like to comment any development on the export order size that we were talking about since last 2 quarters, that there is some export order that we will able to achieve?
Yes, morning, Yash. So the key point is that yes, the order book has grown substantially, a good healthy 10% growth from 30th September to 31st December. As it stands now, it's 5,500 crores, 2,600 crores in turnkey and 2,500 crores in consultancy. We are very clear that we are primarily a consultancy company, and while the orders of consultancy, each order may be of a smaller value as compared to a turnkey order, but in terms of numbers and total cumulative value, this quarter itself, we got a total of 65 orders, out of which about 60 plus orders are consultancy orders. And all those 65 have added up to 1,200 crores. So going forward also, the breakup of the order book, yes, would be a larger percentage would be in turnkey, because turnkey projects take about 3 to 4 years to get executed. So they have to have a larger percentage of the order book. But in terms of revenue mix, what we have been saying that consultancy would always be aimed to be 50% plus. That would continue, and that we are close to that trend. As of now, we are about 46, 47%. The only skew is because the export contribution has been down in this quarter in the revenue segment, revenue contribution. That is why you see a larger contribution by the turnkey segment. But moving forward, as it evens out, the consultancy would still remain at 50% plus. Specifically about export orders, yes, we have now at across prospective clients, whether on a bidding stage or in terms of negotiation stage and finalizing the orders. Yes, we have been trying for last 2-3 quarters, and we are now at quite an advanced stage across a number of prospective clients, and we are pushing very hard to be able to convert it into a finite order. The trend has started. We have already opened our score, where maybe a small order of only 2 locomotives of about 10 crores. We recently got an order for Bangladesh export. But yes, it encourages us that after a hiatus of about 2.5-3 years, the trend has started, and I'm sure in the coming months you should be able to see finite orders also.
Okay, thank you, sir. Second question is on the number of employee, slide number 9.
I think you can come back in the queue, Yash.
Okay.
A reminder to all the participants, anyone who wishes to ask a question may press star and 1 on their touchtone telephone. We take the next question from the line of Vishal Periwal, IDBI Capital. Please go ahead, sir.
Yeah, thanks a lot for the opportunity, sir. So one question was on, there was a media report sometime back which highlighted, Railway has received multiple bids for quality assurance work, and the bids were at a little lower rate than what RITES was charging. So any qualitative aspect or maybe qualitative comments that you can provide, and because despite that the bids are coming at a low rate, we could see margins have improved for us in this quarter. So we're just trying to correlate this to come to some sort of conclusion.
Yes, you're right that a few months back, 1 or 2 months back, the empanelment and order has been placed for 4 agencies. The RITES is one of them for doing the QA work. And as this kicks in, as this new regime and the new rates kick in the coming months, yes, it is going to be, you'll see an impact in the margins on the QA segment of revenue. However, having said that, RITES, because it's been in the QA business for more than 40 plus years, it has got a lot of non-Indian Railways clients also as part of their QA clientele. So our effort is that the coming months, to minimize the impact of the IR business on QA by making good from other non-IR clients. So while there, yes, you're correct, in the coming months you will temporarily see an impact on the margins in the QA stream of revenue, but I'm sure in the coming quarters our effort is to bring it back to the original levels.
Okay, so just continuing on this front, so now can we say that whatever income that we have booked, there is no impact of this particular regime change?
No, you see, this is a transition phase. The order has just been placed, and as these fresh inspection calls come against the new orders, you see, inspection calls are done when the product gets ready. So even after, although the inspection agencies has been fixed, by the time the execution starts and the revenue starts coming in, it would see a gap of maybe 2-3 months. So this is the revenue which you see now in Q3 and maybe part of Q4. These are all old orders.
Okay, sure. So thanks for the clarification. I'll come back in the Q4 for this. Thank you, sir.
Thank you. We take the next question from the line of Ankur Chanwal, an individual investor. Please go ahead, sir.
Good morning, sir. I would like to know more about REMC and future potential of REMC.
Yes, morning. RMCL has been doing tremendously a good uptake in its performance, and this has primarily been because of the increased electrification in Indian Railways and the substantial growth in traffic. As you know, RMCL is the nodal agency for procurement of traction power for Indian Railways. So, in fact, if you see on a quarter-to-quarter basis also, year-on-year basis also, the revenue has grown up by 27%, PAT has grown up by 37%, and it's a high margin subsidiary which gives a margin of 50% plus. So the trend of 9 months also, if you see vis-a-vis the 9 months of last year, we are well on a growth path. It's about 20% growth. Moving forward, I see this trend to continue, as I said, because of the increased electrification as well as the increased traffic. Further, RMCL has also been mandated as the nodal entity for the net zero mission of Indian Railways. A lot of initiatives are being taken under that, and I'm sure in the coming quarters that will also further contribute to the growth and the revenue of RMCL.
Thank you, sir.
Thank you. A reminder to all the participants, anyone who wishes to ask a question may press star and 1 on their touchtone telephone. We take the next question from the line of Mr. Viraj from Jupiter Financial. Please go ahead, sir.
Yes, good morning, sir.
Morning.
My question is, this budget has increased the allocation by almost 1 lakh crore. So how would be the rights benefited in what areas it would be? If you can give some color on that.
Yes, good morning. We are very excited by this high capex budget, an all-time high of 10 lakh crores. And why we say that is because RITES is a consultancy company across all segments of infra. So I have 9 different verticals doing consultancy across all possible sectors. So you see there is a roadway, highway allocation of 2.7 lakh crore, railways 2.4 lakh crore, which itself total combines to 5 lakh plus. Urban infra, which is whether it is smart cities, urban development, metros, they are 1.1 lakh crore, which again is a major area where we do a lot of work in city planning, in city mobility plans, metros. Then Swachh Bharat, there's 12,000 crores. Jal Shakti, 20,000 crores. All these areas we are pitching. In fact, right sustainability, which the vertical we started few quarters back, that is targeting a lot of work in the sustainability areas, whether it is solid waste management or clean air program, pollution. So not only the old conventional infrastructure sectors, but even the new age areas, we are very well equipped, and we're going to leverage this high budget grant to our advantage in a big way.
So continuing on that, say, I mean, can we have 20-25 growth going forward? And maintain it? Okay.
I would not like to speculate, but what I have been specifying, and that's our company vision and strategy, is to target a healthy growth in the profits and the core EBITDA, maintaining a hedge. So everything else stems from that. So if you should see our trend, whether it is 9 month to 9 month or sequentially, our 2 key commitments of trying to have a healthy growth in our core EBITDA as well as maintaining the margin and giving a substantial dividend and benefit to our shareholders, that is the strategy going forward, and that will continue.
Okay, sir. Thank you, and thank you, sir.
Thank you, sir. We'll take the next question from the line of Yash Gupta from Kingsight Advisors. Please go ahead, sir.
Yeah. On slide number 19, total number of employee and the regular employee count has come down in last 1 year by almost 10%, as well as in the last quarter also it has come down. So is the visibility of the execution is a little bit less, or we expect us like single digit maybe growth in next like 1 or 2 quarters down the line?
You see, our employees, we have three broad categories of employees. One is our regular employees, which is about 1,800 out of about 2,600. And balance about 900 are people based on contracts for specific projects, besides few numbers as experts and advisors. So these contracts and project-based employees, these we tweak for better effectiveness based on the profitability of a particular order. So normally we have in every project a mix of the regular employees and the contractual employees. And the aim was to effectively utilize a mix. And you see, that is why there's a year-on-year 6% employee cost reduction in the employee cost, which has helped me maintain my margin. So it's not about numbers per se of the employee. It's about effectively utilizing them to service all my orders. And that would be a continuous exercise.
Okay, thank you, sir.
Thank you, sir. A reminder to all the participants, if you wish to ask a question, you may please press star and 1 on your touchtone phone. We take the next question from the line of Ankur Chanwal. Please go ahead, sir.
Sir, can you please elaborate about Israel joint venture?
No, Ankur, we have been shortlisted at a consortium, and we will be submitting a bid. That's at this stage, that's the only factual information. And if anything matures out of that, we'll inform the exchanges.
Thank you, sir. Thank you.
Thank you. We take the next question from the line of Mr. Viraj from Jupiter Financial. Please go ahead, sir.
Sir, my question is on your custody business. When I look at your presentation, that has been performing the best. So, is it that the portion of the consultancy would go up, or we might have an increase in the volume of the consultancy business going forward?
So, we are very clear as a company, as our vision and our strategy, that consultancy would always contribute a minimum of 50% plus in the total pie. And yes, growth would be always there, but the pie would grow and the share of each revenue stream would grow. But as a broad breakup, consultancy would always we are and will remain primarily a consultancy company. We are not primarily a construction company, and the aim would be to keep on leveraging our strength in consultancy across infrastructure sectors and grow on at least a minimum of 50% contribution from the consultancy stream of revenue.
Continuing on that, sir, any color on green consultancy business which you mentioned in the last call?
Yes, as I mentioned, our RITES Sustainability has bid for a number of opportunities across states, including the ministry also, and we have bid for them. We have recently, about a month and a half back, we had a MOU with IIT Kanpur, their sustainability department, where IIT Kanpur is now a technology partner for all sustainability initiatives, whether it is clean air program, solid waste management, net zero. They are technology partners for initiative across the country, and I foresee that this maturing into orders and revenue in the coming quarters.
Can you give some colors in terms of numbers in this area?
You can come back in the queue after some time now.
Okay.
Thank you, sir. A reminder to all the participants, anyone who wishes to ask a question may press star and 1 on the touchtone phone. We take the next question from the line of Mr. Harshit Kapadia from Elara Securities. Please go ahead, sir.
Thanks for the opportunity, sir. Just wanted to check on this QA part, sir. What portion of your current revenue is from non-rail, from railways? And could you also give us a number for QA in this quarter? That would be helpful.
Yes, so QA, traditionally we have about 2/3, 1/3 broadly as the non-railway is about 1/3 of the total contribution. This quarter, the QA revenue was 72 crores, which has been a good contribution. This includes both IR and non-IR, and I'm sure that this trend, while as I mentioned some time back that there will be a setback for few quarters as we try and come back to honor more non-IR clients as we come back and take more non-IR clients. Yeah, and sorry, the figure for QA revenue this quarter is 99 crores, not 72.
Okay, sir. And just continuing with that part, how do you plan to, add the non-railway portion, and which are the sectors that you are eyeing for? You can share some insight that would be helpful.
In fact, what is the interesting and the good achievement of ours is that we recently got certified as ISA. Now, ISA certification, we are not only the only PSU, but the only second company in the country to get ISA certification. Now, the minute we get this ISA certification, we immediately opens up lot of avenues, whether it is inspection in the metro sector, it opens up areas in a number of other prospective. We recently have had a MOU with the Ministry of Defense for their areas of certain sectors of theirs where we can do QA. So the prospects, and we are pushing very hard for prospective clients in the non-IR sector to bring back in the shortest possible time, in few quarters, the impact due to the IR portion of business opening up to 4 players.
Module.
Hello?
Yeah, sir. Thanks for the explanation, sir.
Yeah, can you hear me? I think we lost you.
Arshad sir, are you there?
I think you can take the next question.
Yeah.
Take the next question.
Move to the next question. Before we move to the next question, a reminder to all the participants, anyone who wishes to ask a question may press star and 1 on the touchtone phone. We have a follow-up question from the line of Yash Gupta from Kingside. Please go ahead, sir.
Sir, on that quality assurance, on the defense sector, that MOU, can you elaborate more on that, the quantum of it, and in part of it we are working?
So, you see, it is a MOU, as I said, which we will tap one by one. I would not like to go into details of the products or the areas. The broad point which I was trying to make was that we are tapping a number of prospective clients to increase our non-railway contribution of QA business. And you would see the figures coming out. As I said, right now it's roughly about 2/3 IR and 1/3 non-IR, and then the effort would be in every quarter to increase that the ratio of the non-IR contribution. Whether it is all prospective clients, I mentioned 1 or 2 of them.
Okay, thank you, sir.
Thank you, sir. A reminder to all the participants, anyone who wishes to ask a question may press star 1. We take the next question from the line of Mr. Mudit Kabra from Elara Securities. Please go ahead, sir.
Hello. Thanks for taking my question, sir. Congratulations on good set of numbers. Recently, we had this news of Amrit Station Redevelopment Program of 1-2 stations, which has an outlay of up to 45,000 crores. Could we know the quantum scope of work RITES could have or could achieve in this program? Thank you.
Yes, in fact, you see, that is the advantage of our varied streams of business, Mudit. And since we do both portion of our revenue as turnkey EPC and portion as consultancy, we can tap this opportunity in a big way. So in terms of the turnkey contribution, we are already doing 3 major stations. We are doing Varanasi, we are doing Ayodhya, we are doing, recently we got the Kollam station order. And in terms of parallelly, we have now started targeting the PMC also for the consultancy, project management consultancy for the station development work. So recently we got an order for Somnath station. In fact, it was in competitive bidding mode, which was a PMC for the Somnath station development. So that's again the strength of ours, that based on one particular sector itself, and as you correctly said, it is a very high priority sector with a lot of high budget grant allocation in that. We are targeting both EPC mode also in certain stations and PMC mode also in certain stations.
Okay, so much.
Thank you. We take the next question from the line of Uttam Kumar Srimal from Axis Securities Limited. Please go ahead, sir.
Yes, sir. Thanks for the opportunity. Sir, how much capex you have incurred in first 9 months and in the third quarter?
You see, capex, the total 9 months we have reached a figure of 106 crores, which is in line with our broad projections of about 125 odd crores. We are primarily a low capex company. Our trend of capex has always been in the range of 100, 125, max about 140 odd crores. And I think this trend would continue in the coming quarters.
Okay. Thank you, sir, and all the best.
Thank you, sir. A reminder to all the participants, anyone who wishes to ask a question may press star and 1 at a touchtone phone. We'll take the next question from the line of Parimal Mithani, an individual investor. Please go ahead, sir.
Yes, go ahead. Morning.
Good morning, sir. Can you hear me?
Yeah, go ahead. Morning, I can hear you.
Yeah. So I just wanted to know, can you elaborate on the non-IR part of the business? Because in the last few calls, you've been particularly focusing on the non-IR side of the business. And how do you see it going forward, sir? It will be better, sir. Can you give a rough idea for?
Yes, in fact, as I mentioned, we have 9 different verticals, and for example, these are highway, buildings, metros, city planning, airports, ports, and rail infra is one of them, and ports, waterways, etc. So rail infra, besides rail infra, as you see, we are touching nearly every sector of infra. So even as you see the trend of recent orders which we have got in Q3 itself, that will give you a flavor of why I say that we have a varied presence. We got 65 orders totaling to about 1200 crores. Now, just to give you a few examples of orders which will show you the widespread. We got a building order from IIT Delhi. We got a metro depot order in Bangalore. We got a tunnel order in Abu Road, Taranga Hill. We got a leasing order from NTPC. We got the PMC for railway sidings across 3-4 major players. We've got an order for bridges on the Farakka Bridge. We got an order from Paradip Port. And we've got recently about 10 orders in the last 1 month in highways across Northeast. So you see, I just mentioned a few. Now across sectors, you see we are getting orders. So that's what gives us the strength, and that's the core strength of our company, that we can tap all possible sectors. And recently, as I said, we started RITES sustainability a few quarters back. So moving forward, I'm sure we're going to get orders in the sustainability sector also.
And so the revenue from this will be margin accretive to us, sir?
Yes, the revenue is spread across all these sectors. These are all consultancy, primarily consultancy orders, and these are good margin orders.
Okay, sir. Thank you.
Thank you. Before we move on to the next question, a reminder to all the participants, anyone who wishes to ask a question may press star and 1 on their touchtone phone. We take the next question from the line of Harshit Kapadia from Elara Securities. Please go ahead, sir.
Thanks for the again. I just wanted to check, sir, there has been a change in the bidding process for the turnkey construction. But first half we had seen very low amount of inputs coming in. We had seen some turnkey construction. Now, how has been the competitive intensity in these turnkey construction projects? Because now.
So you see, one major change that happened in the turnkey segment few months back, early part of last year, was that IR went in from the cost plus model to EPC models. And the subsequent tenders which have come out in the last 8, 9, 10 months are all in the EPC mode. So we have been now bidding in them in the EPC mode, and we're getting orders in the EPC mode. So that which was there in the non-IR sector is now in IR sector also, where the tenders are in EPC mode. What we have also done is that we have, with very intensive monitoring of our turnkey projects, where always these are low margin segment of revenue. Normally it used to be in the range of about maximum 2 to 3%. If you see the margins, we've been able to touch about 4.5% margins in the turnkey segment. So that's a constant effort by effective monitoring, faster execution, and as I mentioned some time back, effective utilization of the resources deployed there, whether it is the men or material. We want to pull as much possible to bring up the turnkey segment margins also to an appreciable level. So Q3 margins in turnkey segment of revenue are as good as about 5%. If you compare year on year, Q3 last year was literally about 0%. If you compare 9 months to 9 months, the last year it was 1.3% and we are 4.2% now in the turnkey segment.
How is the competitive intensity now with private players also, bidding at the same forum as you are? And secondly, is this 5% now more sustainable number, or it can again reverse back to 3%?
So competition is tough. Yes, now it's an open field in all our segments of revenue, and that is the challenge, and that is what we have taken it head on. That all my 4 streams of revenue in the last 3-4 quarters have been opened up to all competitive bidding, and we are very well equipped compared to a number of sister competitors and sister companies, where we have been bidding competitively, getting orders, as you see the trend of orders. And in terms of maintaining these turnkey margins in the range of 4-5%, it's a tough exercise, as you would appreciate. Normally, it's very difficult to bring up turnkey margins above 2-3%, but our efforts would be on to keep it as high as possible.
Fair enough, sir. Wishing you all the best for this.
Thank you.
Thank you. A reminder to all the participants, anyone who wishes to ask a question may press star and 1. We'll take the next follow-up question from the line of Uttam Kumar Srimal from Axis Securities Limited. Please go ahead.
Yes, sir. Sir, can you give me the figure for cash and cash equivalent at 9 months?
Yes, our cash as of now, I have my Director of Finance, Mr. Nayak. We have about 800 crores. He'll give you more details.
Yes, exactly. We have around 742 crores, which is the rights fund. Besides, on behalf of the clients, we are holding around 2,500 crores, which actually belongs to the client. These are the advances received for the project executions.
Okay, sir. Okay. That's all from us. Thanks.
Thank you. A reminder to all the participants, anyone who wishes to ask a question may press star 1. We'll take the next question from the line of Vishal Periwal from IDBI Capital. Please go ahead, sir.
Yes, sir. Thanks for the opportunity again. Sir, on our revenue guidance, I think last 2 quarters in terms of revenue, we are seeing probably muted numbers. So what the full year basis, earlier we were targeting a double-digit kind of revenue growth. So how exactly are we seeing things now?
Vishal, let me again reiterate, we have been targeting a healthy growth in the PAT and the core EBITDA. We have never said that we are targeting a double-digit growth in the revenue. We are very clear that our taking of orders and our revenue will all stem from our core strategy and vision of having a healthy growth in the profits, the healthy growth in the EBITDA, and maintaining a margin, a steady core EBITDA margin in spite of the changed ecosystem of competition in all our 4 segments of revenue. And if you see why I'm saying this, that we are on the right track, promise as we deliver, and we deliver what we promise, is that the 9-month figures, if you see, we have seen a 9% growth in the PAT. We have seen a 7% growth in the core EBITDA. Our core EBITDA margins are in about 28%. Our PAT margins are 21%. So we are on track. Our total PAT is about 432 crores in 9 months, as against 539 crores in last FY complete. So we are definitely on track as per our promises, that we will continue to give a growth, steady growth in the profits and the core EBITDA while maintaining our margins.
Sure, sir. Just to continue with this, maybe for EBITDA and PAT, can we see single digit, maybe high double digit, or maybe what trajectory you will guide for yourself or maybe for the market to look at?
You see, as I said, to speculate a number it will not be fair, but continuously, whether you see sequentially, whether you use 9 months, there has been a growth in the EBITDA and the profit, and we will continue to do that. Even if you see sequentially, the core EBITDA grew by 8%. So that's what I say, a minimum. We are aiming for that kind of range. Yes, obviously, the aim would be to maximize it as much, to reach double digit, cross double digit, but the aim and the continuous effort is to try and see a healthy growth in the core EBITDA.
Sure, sir. Thanks for the detailed explanation, and I'll come back in the queue, sir. Thank you.
Thank you, sir. A reminder to all the participants, if you wish to ask a question, press star and 1 on your touchtone phone. We take the next question from the line of Mr. Mudit from Elara Securities. Please go ahead, sir.
Thank you once again for the opportunity. Sir, could you throw some light on prospects from RMC and the nodal agency for net zero emission policy? Like, apart from electrification, what other kind of projects can we get into?
Yes, RMCL has now been mandated for last about a year and a half for the net zero mission, and lot of various initiatives, various tenders and RFPs, RFQs have been floated for development in this area, in the RTC mode, in the developer mode, and moving forward, whether it is solar energy, wind energy, and a combination of these will fructify, I'm sure, in the coming months. And RMCL as the nodal agency, as the consultant for that initiative, will definitely gain.
Sir, can I have one more question?
Yes, go ahead. Yeah.
Yeah, thank you, sir. So, like now the exports are softened, but could we have some inquiry pipeline, like across geographies? Are we having any inquiries?
Yes, as I mentioned, we have bid also, we are bidding also, and we are tapping the non-bidding LOC kind of opportunities also across countries in Southeast Asia and Africa. And the start has been made. We got an order, as I said, a small order for 2 locomotives, but we are tying up with a number of prospective clients, and I'm sure, yes, you see, export order by nature, by the time because all these countries have to arrange funding, whether under the line of credit mode or by the internal resources, whether they are Southeast Asian countries, Bangladesh, Sri Lanka, or African countries, the Cape Gauge countries. They are also all recovering from the economic setback of COVID. And in most of the negotiations are at stage where the final stages of trying to get fundings or bidding and things like that are happening. So I'm sure in the coming months, we should be able to definitely convert it into a finite order.
Yes, sir. Thank you.
Thank you, sir. A reminder to all the participants, if you wish to ask a question, please press star and 1 on your touchtone phone. We take the next question from the line of Prashant Gopal from Spark Asia Impact Managers. Please go ahead, sir.
Good morning, sir. Can you give some color on execution timelines or margins under turnkey segment for IR and non-IR projects?
Yes, morning Prashant. You see, turnkey projects per se, our experience shows that it takes anything from about 3 to 4 years. And that's the reason why even if we limit we have been aiming, and that will be a constant endeavor to continue to have about roughly in the range of about not more than on a steady basis 25% contribution of revenue from the turnkey segment. It may vary from quarter to quarter, some ups and downs, but on a steady basis, on an average basis. But because these take about 3 to 4 years, they require a larger order book. And that's why if you see the order book, the portion of the content of the order book on turnkey will always be more vis-a-vis consultancy. As far as margins are concerned, turnkey contracts by nature have low margins. I mentioned a few months back that they are normally in the range of 2 to 3%. We have, with a lot of effort of effective execution, timely execution, we have pulled up the margins in 9 months to 9 months. We have gone up from about 1.3% in last 9 months to about 4.2%. And that will be our endeavor to pull up these margins as much as possible so that our overall margins, which are our company vision is to have safe, good margins, the impact of the turnkey segment is also satisfactory.
Thank you, sir.
Thank you, sir. A reminder to all the participants, anyone who wishes to ask a question may press star and 1 on your touchtone phone. A reminder to all the participants, anyone who wishes to ask a question may press star and 1 on the touchtone phone. We take the next question from the line of Harshit Kapadia from Elara Securities. Please go ahead, sir.
Yeah, hi. Thanks for the opportunity again. So just wanted to check you on the consultancy side, if you can share any large projects which we are eyeing or we have bidded, because Indian Railway is coming out with a very large size of project which hasn't announced in last multiple years. So any pipeline or any color on any project where we are there would be really helpful.
Yes, so you see, in terms of the thrust from our company, seeing the allocations in these the budget also, you see, rail infra is an important. It's one of the highest ever allocations, 2.4 lakh crores, and the thrust on rail connectivity, whether it is coal fields or ports or power plants. We have got a good number of orders in Q3 itself, and we are pitching both in the competitive as well as the nomination basis in IR rail connectivity, both as IR and non-IR clients. Many of these clients are non-IR clients. They could be Coal India and the subsidiaries, it could be NTPC, it could be ports. So we are, and there are some private clients also, so we are pitching cement plants, etc. So rail connectivity is an area where we are going to pitch very aggressively. Highways, you see, it's again a very high allocation of 2.7 lakh crores. Again, recently, as I mentioned, we got about 10 orders itself in a span of few days, hardly less than a month in the Northeast, totaling to about 23 crores. So highway is again an area where we are going to pitch very aggressively, again both on bidding mode as well as as independent engineers for various. We are doing a lot of work across highways across states, whether it is UP, whether we are doing a lot of work in Kerala, across states. I mean in Karnataka, as I said, Northeast, across states we have got a number of highway orders. Similarly, in the metro sector. You see, the metro sector is growing so rapidly across cities, whether it is tier 2, tier 1, tier 3 cities. We have been pitching for a number of bids in metros, and I'm sure metro is another area. City planning, we recently got the logistic plan. We've got it for Ayodhya. We've got the pilgrim management plan order from Ayodhya. We've got a number of city plans. We've got most recently we got the mobility plan for Calcutta, and moving forward, we are airports again. Airport, the aviation growth, such a large allocation in airports. We are doing a lot of work in airports also. So across sectors, we are bidding for these areas as well as pitching to get them on nomination basis also.
Anything on DFC or any high-speed train project where things are moving and we are getting some work there?
DFC, we are already a partner. We are a permanent consultant partner for DFC. And for high-speed rail, we keep doing a lot of surveys and consultancy work. We have been doing it. We keep doing it as the requirement comes up, whether it is for FLSs, VPRs, any particular bridge, or any particular tunnel, any particular design. So we are the whether it is some communication work, some signaling work for high speed. So you see, we have got strength in each of these areas, and whether it is the existing upcoming DFCs or future DFCs, whether it is the high-speed railways, or even now many semi-high-speed corridors are being identified. We have already been associated for making some FLSs and PFRs and DPRs for that.
Fair enough, sir. Thank you, sir.
Yeah, thank you.
Thank you. A reminder to all the participants, anyone who wishes to ask a question may press star and 1 on the touchtone phone. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. As there are no further questions, I would now like to hand the conference over to Mr. Harshit Kapadia from Elara Securities Private Limited for closing comments.
Thank you, Seema. We would like to thank Shri Rahul Mittal, Chairman and Managing Director, BP Nayak, Director Finance, Mr. A.K. Singh, and Joshit Shikadar, Company Secretary, for giving us an opportunity to host this call. We would like to all thank investors and analysts for joining for this call. Any closing remark, Rahul, sir?
I just want to reiterate that our company is, as I said, we deliver what we promise, and we at RITES, each of our employees, 2,600 plus employees, are very excited by this amazing push in capex for infra, and moving forward, this as our core strength. This is our core strength. We are our consultancy company. This is our core strength, and we will leverage this to our advantage to tap all possible sectors of infra. Our commitment to our shareholders with this third interim dividend of 6 rupees a share, taking it to a total of already 14.5 for the cumulative of 3 interim dividends for this FY, vis-a-vis a total of 17 rupees a share for the last FY. We are on track to do our best for our shareholders also. Thank you.
Thank you, sir. Ladies and gentlemen, on behalf of Elara Securities Private Limited, that concludes the conference call. Thank you for joining us, and you may now disconnect your lines.
Thank you.